Most people think the rich have secret investments, private stocks, insider tips, hidden opportunities. But here's the truth most people don't want to hear. The rich don't win because of secret investments. They win because of simple systems they follow consistently. In this video, I'm going to break down how the rich actually invest their money, and more importantly, how normal people can copy the same system. Step by step. No hype, no get-rich-quick, just strategies that have worked for decades and still work in 2026. Hi guys, welcome back to EduTech Finance channel, where we teach the smart way to grow your finance with ease. Please, if today is your first time watching my video, kindly like the video, comment, share, and subscribe to the channel for more videos like this. Before we continue, a quick disclaimer. This video is for educational purposes only. I am not a financial advisor, and this is not financial advice. Everyone's financial situation is different, so always do your own research or consult a licensed financial professional before making investment decisions. All right, let's talk about how wealth is really built. The big myth about how the rich invest. Most people believe the rich invest in ways that are completely out of reach for normal people. They imagine secret meetings, insider information, private deals that only billionaires can access. And because of that belief, many people never even try to invest seriously. They think, what's the point? I don't have what they have. But here's the uncomfortable truth. The biggest difference between the rich and everyone else is not access, it's behavior. Wealthy people don't magically become rich because they discovered a secret stock or a hidden investment strategy. They become wealthy because they follow simple principles consistently, often for decades. In fact, if you watched how most wealthy people actually invest, you'd probably find it boring. No constant buying and selling, no panic during market crashes, no excitement every time the news changes. Instead, the rich approach investing like a long-term system, not a short-term game. Here's where most people get it wrong. Average investors ask questions like, what's the best stock to buy right now? Is the market about to crash? How can I double my money fast? Wealthy investors ask very different questions. How do I protect my money over time? How do I grow this steadily for the next 20 or 30 years? How do I remove emotion from my decisions? That difference in thinking changes everything. The rich understand something most people ignore. Making money and keeping money are two very different skills. You can get lucky once. You can win a trade, you can catch a trend, but wealth is built by people who survive downturns, mistakes, and boring years, not by those chasing excitement. Another major myth is that rich people take huge risks. In reality, they do the opposite. They avoid unnecessary risk. They diversify. They plan for bad years, not just good ones. They know that losing money hurts more than making money helps. So instead of gambling, they focus on probability. High chance of modest returns over long periods of time, repeated consistently. This is why many wealthy investors prefer broad markets and diversified assets instead of chasing the next big thing. And here's the most important part. None of this requires you to already be rich. These principles work whether you're investing $50 a month or $5 million a year. The problem is not that people can't copy the rich. It's that copying boring, disciplined behavior is harder than chasing exciting shortcuts. And that's why most people never do it. In the next scene, we're going to break down the core rule the rich follow when investing. A rule so simple that many people ignore it, yet it quietly builds massive wealth over time. The core rule the rich never break. The single most important rule the rich follow when investing is this. They invest consistently, not emotionally. This may sound simple, but it's incredibly powerful. Most people invest based on feelings. They buy when the market is exciting, they panic when prices drop, they stop investing when things feel uncertain. The rich remove emotion completely. They don't ask, is now a good time? They ask, is it time according to my system? They invest on a schedule, monthly, quarterly, automatically, no guessing, no waiting, no stress. This consistency allows them to benefit from both good markets and bad markets. When prices are high, they keep investing. When prices are low, they keep investing. Over time, this discipline smooths out volatility and builds wealth quietly. This rule works because markets reward time, not timing. Simple real-life example. Let's make this extremely practical. Imagine two people, Michael and Chris. Michael believes he needs perfect timing. He waits for crashes. He waits for confirmation. He waits for certainty. Chris uses a system. Every month, on the same date, money is automatically invested no matter what the market is doing. Some months, prices are high, Chris buys fewer shares. Other months, prices fall, Chris buys more shares. Without trying, Chris gets an average price over time. Michael, on the other hand, keeps waiting. And while he waits, the market continues to grow. Years later, Chris owns assets, Michael owns opinions. This example shows why discipline beats intelligence. You don't need to predict the future. You need to stay invested, what the rich actually invest in. Despite what social media shows, most wealthy people invest in boring assets. They favor broad market index funds, ETFs, diversified portfolios. Why? Because these assets spread risk, reduce volatility, capture long-term economic growth. The rich understand that trying to beat the market consistently is extremely difficult, even for professionals. So instead of competing with the market, they own the market. This approach requires less effort, costs less in fees, produces reliable long-term results. Boring investments don't make headlines, but they quietly build wealth. How the rich control risk. The rich don't avoid risk, they manage it. They do this by diversifying across assets, investing long-term, avoiding concentration in one idea. They expect downturns, they plan for recessions, they don't panic when markets fall. Why? Because they understand that volatility is normal. Risk becomes dangerous only when emotions take over. This mindset allows them to stay invested while others exit in fear. The simple system anyone can copy. Here's the exact system many wealthy people use simplified. 1. Earn income. 2. Control spending. 3. Save automatically. 4. Invest consistently. 5. Stay invested long-term. No complexity, no guessing, no shortcuts. Automation is the secret weapon. When good decisions happen automatically, discipline becomes effortless. This system works whether you earn a lot or a little. If this video helped you, like the video, subscribe for more beginner-friendly wealth content. Comment system if you're committing to long-term investing. Remember, the rich don't chase money. They build systems that attract it.